In order to break below this, we're going to have to get below 30, where we're at right now, below 31.78. What is going on, crypto peeps? Welcome back to the Traveling Crypto. Let us get right into it because I have some important market updates to get into, specifically with regards to BTC, since BTC dictates the entire market, at least for now. So looking at BTC, you'll see that this white line right here is the 2018 support. Obviously, we've fallen below that in terms of wicks, but we have never closed below this support line in 2018. This is on the 4-hour chart using Coinbase's price for BTC. And if you look at this candle right now, we are well below support at 32.59 currently. Now, based on the volume here, and the lack of volume with these green candles, right? Like we did have green candles in this channel, and we were swing trading within this channel. I'll get to that in a second. But the green candles weren't accompanied with significant volume. We weren't even going above the average of the volume denoted here by this orange line, which is the 20-period moving average for the volume. So that, along with the fact that the red volume as of late was a lot more significant than the green volume. You know, we've been saying for the last few weeks that we will see a decline of the sideways channel if we don't get any injection of volume to offset that. And we've been seeing this time and time again with Bitcoin in the second half of 2018, more so like end of Q3, Q4, 2018, right? So you'll see here that we have this sideways channel. And, you know, we were trading within this, and it was a period of low volatility, but without volume, there's no reason for us to stay within this channel. We saw this going back as well here in this channel, going back all the way to November, right? You saw it trading in a sideways formation for quite a while before this broke down due to a lack of volume here at the end. And then, you know, there was a much larger sideways continuation pattern going all the way back to the beginning of September that you see here. This one lasted quite a long while, from September to November. This was uncharacteristic, right? This was the longest period of low volatility that Bitcoin has ever seen, almost over 2 months of low volatility within this really tight channel between 66 and change and 61 and change, right? Now, in terms of trading opportunities here, you do have trading opportunities here, especially if you use leverage. So if we take a look at the XBT chart, this is specifically for the futures on BitMEX. You'll see that, you know, you can trade these channels as soon as we hit support of this channel. You can enter a long, and then close to resistance or at resistance, you sell it, and then you can enter a short and keep riding this wave here until obviously the trend is broken. There is a saying, trend is your friend until it isn't. So right now we broke this channel. There's no reason to enter a long or a short because we don't know what how the price action is going to shake out. If we establish new 2018 lows, then you obviously have a new market foundation for that period, right? Like that will set a new precedent. So again, going back to the sideways trading that we saw on BTC, if I go back to this chart, we had this sideways channel, right? And then when that was broken, it set a new precedent. And then we had this sideways channel going from the third week of November until about the second week of December. When that was broken, we had a new precedent. A lot of people refer to this as market structure or market foundation, whatever. It is what it sounds like, right? So we're establishing new continuation cycles of lower lows in 2018. It's just that, you know, a lot of times the price action is not going to see a sharp decline. You're going to see a decline followed by sideways continuation, another decline, sideways continuation, kind of like in this downwards, in this downward steps pattern, right? Again, with leverage, you can make a great deal out of these continuation patterns. And if you want access to the trade alerts, link is in the description. I do send out trade alerts for leverage positions here in the futures alerts private. You'll see here, this is a previous one, so I don't mind showing showing it to you. But yeah, it's pretty simple. Just entering along on XBT at $3,300 for 5x leverage. I don't get too crazy with the leverage. I do like to mitigate and minimize my risks. There are a few traders on the Discord who do like to engage in higher risk and might opt for a 10x leverage, for instance. Obviously, the higher your leverage, the closer your liquidation price is to your entry. Let us take a look at the weekly chart real quick, because there is something rather significant here that you have probably seen or heard me talk about as well as other people talk about, but it's this 200 moving average here, which is denoted in this yellow line. And we are clearly bouncing off this. Now, in order to break below this, we're going to have to get below 30... where we're at right now, below 31.78. That's where we're at right now. Obviously, this is a moving target, right? It's dynamic because it's based on the average of the price action, and every day, or in this case, every week, you have a new candle. So it's not linear, right? So this curve does adjust depending on what the price does. But yeah, as of now, if we go below 31.78, we'll be below the 200 moving average. This is probably, in terms of indicators, the most important one to look out for now, because it's the one that gives us the most information. If we break this, then we are establishing a new precedent, and we could certainly be below a 200-week moving average for quite a while, furthering the bear market, right? We see this in other markets as well. I think we'll have a clearer picture by tomorrow what BTC is planning to do for the coming weeks, at least until the end of December. If we fall below this 200-week moving average and close below it, then we could see more bloodbath continue before the new year. All right, looking at coin market cap real quick, there are only really a handful of coins that have seen double-digit percentages against US dollar value, a little bit more against BTC value, but Maker being the big one, and then Waves being the other one. So Waves, over the last week, we've seen a 53% increase against BTC value. Maker, we have seen a 33% against BTC value, but really anything in the top 50 besides those two, there hasn't been anything that has established a double-digit percentage over Bitcoin. Well, Qtum, you see here at almost a 13% gain, and then Tezos as well, 17% gain. But yeah, besides the handful of coins, there hasn't really been any significant movements. And current market cap is at 105 bill. This actually just decreased 3 billion just from a few hours ago. This was at 108 billion. So just a further testament that when Bitcoin is crashing, the overall market cap takes a huge hit, because Bitcoin constitutes a large percentage of the market. Over half of the market is dominated by Bitcoin. All right, in terms of other coins I'm looking at, QKC I'm always looking at because it's a great hedge against BTC. We did send out multiple trade alerts for QKC. Again, sign up for those. Link is in the description. But it continues to be a bull against Bitcoin. Even when Bitcoin is taking a dump, BTC will be trading sideways for the most part, not really sustaining a large, steep decline the same way some of these other coins do. XRP is interesting because it is within this really low volatility channel, something we're not used to seeing on XRP for a while, but it's in this very low volatility sideways continuation pattern as well. And just going back to Waves real quick, the reason or part of the reason that Waves has seen such a massive rally is because they just released a new mobile wallet update, I guess. This was announced on their Twitter as well as on the crypto publications, but this is what spurred the rally for Waves. All right, moving on to the traditional markets. A lot of you have messaged me saying that, you do want me to incorporate the traditional markets into the video update. So I'm happy to do so. It's something that I do on my own time anyway, so I'm very happy to do it. And I do think that diversifying into stocks is a good way to spread out your risk, right? So that you're not overexposed into one market or one asset class that is extremely volatile and is actually taking a beating at the moment. So the S&P 500 there hasn't been really much movement in the traditional markets as of late. You see the volatility is down almost 3%, but there's less than a percentage gain or loss in the major indices, right? So the S&P 500 is just down 0.09%. NASDAQ 0.46%, and the Dow Jones is up 0.06%. So it's really been a stagnant day in the markets. There are a couple of stocks that I'll go over right now, two of the stocks that I actually own. But in terms of doing analysis, I want to show you that, all of these pattern formations that we talk about, bear flag, cup and handle, inverted head and shoulders, etc. These all come from the traditional markets, and actually they apply a lot better in the traditional markets than they do in crypto, because crypto is so volatile and you never know how much volume you're going to get on a daily basis, right? Like sometimes we get an injection of volume out of nowhere in crypto, and then sometimes it's in this dead zone for months. But when you look at something a little more stable like the stock market, these patterns do tend to play out a lot more efficiently, I should say, right? Or they're easier to predict. So Johnson & Johnson is a stock that I picked up. I actually invested in it a couple of times. One, when we saw the golden cross here between the 50 and the 100 moving average, and then when we saw the golden cross between the 50 and the 200 moving average. And you guys know this from the crypto world, that these are great indications, along with other things such as volume, etc. But these are great indications of entry points into something that is rallying in a bullish manner, right? But you see here this pattern on Johnson & Johnson. It's a traditional cup and handle pattern, right? Here's the cup. Not sure why my computer's being slow right now. And then here's the handle portion of it, right? And the cup and handle is obviously a bullish pattern, and we see an incline from there. Now, there continues to be bullish momentum on Johnson & Johnson, as indicated by, the VFI, the MACD, and the RSI. And we are now hitting a point of resistance where we were before when we saw the drop into the cup and handle formation, right? All the way back in January. So we're hitting these almost a year long before we got back to the resistance levels that we've seen back in January. It'll be interesting to see if we can break this, coming into the new year, or if we will hit a resistance point and decline from there. All indications based on volume and momentum say that we are going to break this. So it is a good entry into Johnson & Johnson, in my opinion. Looking at Microsoft, Microsoft is actually one that I've held for a long time. And again, these indicators, especially when we're in a bull market, but these indicators in stocks, I think work a lot better than they do in crypto. That is just my experience, right? So I entered Microsoft when we saw that golden cross, again, between the 50, in this case, between the 50 and the 100 and 200, right? Because they were line in line or neck and neck for quite some time. But the 50, which is this green, we saw it cross above. I entered Microsoft here. This is going all the way back in 2016, and really just kept on holding because the momentum was on a steady incline. However, I'm looking to sell Microsoft currently. Why is that? Well, we're now seeing a stagnation in price. And if you'll see here, the 50 fell below the 100. So I'm eyeing these levels pretty closely to see if there is actually a selling opportunity, if I should offload Microsoft here and maybe pick it up at a better price in the future. Like, I don't know if this is going to spur some more downward movement or not. Time will tell, but stocks are not as volatile as crypto, so you do have the luxury, and there is an actual open and close of a market, right? And so you do have the luxury of waiting a bit more to see how the price action develops versus trying to catch a falling knife or trying to catch FOMO into a rally. Anyway, I hope that was helpful. I will continue to incorporate stocks into these daily updates, and I'll put them second. That way, if you want to ignore it, you can just shut off the video. But I do think it is helpful to look at different markets and see how these indicators behave within different markets. But if you are really seriously considering investing or trading, I think you're selling yourself short if you don't diversify into the stock market, because it is actually, especially if you're becoming more and more familiar with these patterns, it is something that's translatable and actually more applicable in a market like the stock market versus something that's super volatile and swingy like the crypto market. All right, that is it for this video. I hope you appreciated it. If you got anything out of it, please hit that thumbs up. If you have a comment, a question, agreement, disagreement, leave it in the comment section below. Sign up if you want access to the trade alerts. I've decided I will start putting stocks on the trade alerts as well. So I'm going to be opening up a new channel within the next couple of weeks to include stocks in the trade alerts. If you want help with your technical analysis or need one-on-one coaching, that link is also in the description. Stay safe out there, guys. Peace.